Gold has been on a tear all year, but 2025 is built different. More volatility, more liquidity, but this also means more traps for traders. You're gonna see a lot bigger movements than maybe what you're used to. In this video, we're gonna break down how to trade gold smarter in 2025. Because if you're still trading gold like it's 2022 or 2023, you're a little bit behind. So we're gonna break down some tips in this video on how to trade gold smarter in the year of 2025 to stay ahead of the game. Especially for those of you guys who have only been trading for maybe a year or two. Even if you're not just trading primarily gold, there's other assets that have a lot of volatility like indexes, US 30, S&P, right? Even the currency pairs are gonna be experiencing more volatility on a general basis in 2025. Why do I say this? Because in 2025, we are under the Trump era. Donald Trump, a former president and the current president of the United States for the next 4 years. So under him, this means the market is going to have more volatility and also more liquidity. The reason you're seeing more volatility in the market is because there's a lot more liquidity coming into the market. There's a lot more participants in the market coming in. So there's a lot more bigger moves happening than maybe what you're used to seeing. So 2025 is definitely a year where you want to trade smart, not trade hard. All right. You don't want to force your trades. More trades isn't always the objective in trading. You want to trade smarter, and we're going to be going over that here. So what's changed in 2025? I don't want to say anything's really changed. We've got to talk about what's happened coming up to 2025. What started 5 years ago with the COVID-19 pandemic. That was a major crisis that happened, and that affected all of the markets, whether it's gold, whether it's stocks, even cryptocurrency, especially Bitcoin. So when we're talking about gold and what gold is, guys, gold is the number one asset in the world in terms of market cap. Gold has always been known as a store of value. So when bad things are happening, gold will usually thrive or have a lot more demand into it because people are going to want to buy gold more. That's why there's going to be more liquidity. More liquidity means more volatility. What's been creating a lot of volatility in the last couple of years? Well, we can start off with COVID-19 for an example. COVID-19, I'm sure everybody watching this video remembers that 5 years ago. Around this time, actually, that I'm recording this current video, March 2020, end of February 2020, going into March. Let's go back to the chart and look at gold in the time COVID was really starting and this pandemic and crisis was elevating and increasing with more and more fear all over the news. It was everywhere, right? So here we have the COVID crash that happened in 2020. What did gold do for like the next couple of months? April, May, June, July, up until August, the next 5 months, end of August, price pushed up. There was a lot of times of uncertainty there. What the world was going through with that major pandemic. Everything was closed, right? Gold experienced a time of demand where more people were participating in gold, buying it, and it increased demand, and there was a lot more volatility in your day-by-day price movements, kind of like what you're seeing these days, right? If you've been trading gold even for a couple of years, right? I myself have been trading it for 10 years, and I noticed times in the last 10 years where, whoa, the days are now moving hundreds of pips versus a little bit average. Like the average pip movement in a candlestick is much more right now than maybe what you're used to, even if you're really used to trading gold already. I remember like 3 years ago, the volatility was not as crazy as it is right now, right? Especially under Donald Trump with the ongoing tariffs. What is causing gold to go up like it has over the last year? Because remember, gold, if we zoom out and look at the all-time chart on gold, it has always gone up historically. If we're just gonna zoom out for a real quick minute and look at the gold chart from as far back as we can go until today, it has always gone up. What does that tell you about the world? The world has always been going through uncertain times in different decades and centuries here. We can see on the chart, right? If we just zoom in and go back to 2020, we'll just start at 2020 because 2020 really started to kick this thing off. Until then, or since then, the price has just been going up. So one thing you got to understand about gold is when there's bad events, let's say crises, conflicts, wars, right? We have wars going on in the last couple of years, multiple conflicts and crises, Ukraine, Russia. What do these situations create? Uncertainty, because they're conflicts, right? They're crises, ceasefires, all of these different things. So what's changed for gold, right? Because at the beginning of this video, I said 2025 is different. And I was saying what's changed. I wouldn't say anything's changed. There's a lot more volatility. We have to understand why there is volatility, why we are where we are, and why price has been moving, how it's moving. Because if you haven't been looking at the charts for the last couple of weeks, for the last month, if you haven't been on gold for the last month or two, you're probably looking at like, whoa, where are things at, right? It's been like this for the last year, to say the least, because look at what has happened in the last couple of years with wars and situations happening all over the world. A lot of uncertainty created. So gold is realistically ahead of Bitcoin right now when we compare the charts. We're gonna do that in another video where we talk about crypto. But when you look at gold, it's been thriving. So this dynamic of geopolitical and economic shifts with like the interest rates, the inflation, everything getting more expensive, right? What your dollar could buy you 4 years ago versus the price of gold has increased, right? Holding dollars while everything else is getting expensive, inflation, right? So institutions understand this. There's more players coming in the game, right, with gold. That's creating this new market behavior with volatility. More volatility means deeper pullbacks, more traps, more manipulation. We're actually even seeing that on crypto. We could compare what we're talking about right now with Bitcoin as well. So that's what's changed, right? Nothing's really changed, but I would say this market behavior creates more of what we're used to. We're already used to volatility in the market, but now we just have a lot more of it, right? We're used to pullbacks, but now these pullbacks are going to be deeper than what maybe you're used to. We're used to stop hunts, manipulation, liquidity, and all that, but there's a lot more of that happening bigger, maybe even faster than what you're used to. So in 2025, the reason I started this video saying how to trade gold smart in 2025 is because you want to be aware of these things. You want to be more patient this year. You want to learn to sit on your hands a little bit more than you're used to. Why do I say that? Because we have all these headlines coming up, right? With tariffs, wars, all these situations that we don't know really where the world's at, and that's what's creating all this uncertainty or volatility. If we take a look at the gold chart, for instance, and we talk about deeper pullbacks, right? Let's zoom out here and look at kind of the current market that we have here. Okay, we're looking at the 4-hour time frame on gold right now. If you look at this, I'm just gonna mark it with some arrows real quick for you guys. How many pullbacks do you see on gold? Now these are gonna be some big pullbacks, right? Really deep pullbacks that are happening in the market. It depends on your perspective of these. Some traders would look at these as like, whoa, big sells are happening. Maybe now we're shifting to the downtrend because gold's so high. But most traders don't really understand where gold's at in terms of demand, right? With everything going on in the world. Think about this for a minute. For those of you guys who don't really trade so much, or maybe getting new into trading and understanding gold, think about 4 years ago or a couple of years ago when you go to the grocery store and just buy everyday goods, and now you go and those same things you would buy are just more expensive, right? That's called inflation. Now, when you look at the price of gold, right? The price of gold in all the time where your everyday essentials or little needs are getting more expensive. It could be food, it could be dog food, right? It could be appliances, cleaning utensils, home stuff. Everything we could really name, prices have gone up. Eggs, right? We got Donald Trump, how he was live the other night talking about Joe Biden with the eggs, right? Eggs have gotten expensive, as this guy here likes to say, right? So think about the price of gold. The dollars in gold have just kept their value or even just increased in value. So these large institutions, right, the big players, think about what they're doing with their money. they've been preserving, keeping more of their money. Also, it's been going up in value. So when it comes down to gold, it's number one. Yeah, Bitcoin is like 10 times behind gold. Think about that, because if Bitcoin was the current market cap of gold, it would be like $1 million per coin. So something to think about. So these pullbacks, a lot of traders don't understand where gold's at when it comes to these drops that I'm marking on the chart. A lot of traders are looking at it like, oh my gosh, gold's so high, this pullback has to be like the sell, we're going down. But if you look at how many pullbacks I've actually marked here, just on the 4 hour, or just looking at it from a 4 hour perspective. So if we zoom in for a minute, and we're pretty much at the beginning of 2025 here, how many dips? The reason I keep bringing up Bitcoin a little bit in this video is because we're gonna call these dips, right? Because we know there's demand for gold. And those of you guys who like Bitcoin or understand crypto, we often say buy the dip in reference when we're talking about cryptocurrencies or Bitcoin. People always just say buy the dip, and then the dip turns into a bigger dip, and then you have a dippity dip. So I'm sure we all know what I'm talking about with that being said, right? So when you look at gold, think of the same psychology right there, kind of for a reason. Because a lot of people approach that with crypto, like people see crypto drop on the 4 hour and like, I gotta buy the dip, or it drops on the 1 hour, I gotta buy the dip, right? Gold, it could drop in New York session and it's like, I gotta buy the dip, right? Or it has like on this chart, this is a perfect example because it's a clear uptrend. For those of you guys who know market structure and understand market structure, go on the channel, we have a couple videos on market structure as well. So these, turn your psychology for a minute, knowing like there's demand with gold right now. There's a lot of stuff that's going on in the world that's causing this demand. Think of these pullbacks as like a buy the dip. Because if you look at every single one now, we're just on a 4 hour, real simple. We're gonna be talking about lows and highs here, just on the 4 hour chart. So this year, to trade smart, I'm gonna give you guys a couple strategies by the end of this video and tips. One of them is going to be stick to the time frame that you're most comfortable with, right? The time frame that you see the best results on, that you find the best setups on, even if you have to wait for them. 4 hour could be that time frame. That's why I'm using a 4 hour for this example, because you don't have to be good at every single time frame to be a profitable trader. You might just be good at the 1 hour, or you might just be really good at the 4 hour, or maybe a mix of like 4 hour, 1 hour. I think this year, a smart tip would be to be more patient. And a good way to be more patient is by sticking to the time frame you know you're best at analyzing for setups. Because if you're just jumping from 4 hour, 1 hour, 35 all the time in and out, you're gonna find a scalp. Meanwhile, the market's maybe setting up on the 4 hour. You might be getting a scalping entry, looking for a 4 hour swing, doing the opposite of where the market's at. So a way to be more patient this year is just stick to one time frame, right? So you're kind of just like locked in more, not looking at so many setups. You have more control over, okay, I'm only going to be taking a setup on one time frame. Let's just say for the 4 hour, for instance, you're only looking at the 4 hour, right? How many dips do you see on gold here on the 4 hour? We could even throw the Fibonacci retracement in there, and you can see you perfectly come down to the 61.8, 70% fib from this low to this high, which also gives you a BOS, a change of character to the left. So there's one good 4 hour setup where we have a buy the dip scenario, aka a retracement. Look at as the market goes up, where is the next swing? Down, right here, right? We run up from there and we create a trend, we make a new high, aka a higher high here, and we have another buy the dip scenario on gold. And it keeps making these higher highs, and every time it makes a higher high, what are you getting? You're getting a buy the dip scenario. Why are we getting these buy the dip scenarios? Goes back to everything I said, right? You're getting these because there's a demand right now. Why is there demand for gold? Times of uncertainty. It all goes back to everything I've been saying, right? It all ties in with the bigger picture of things going on in the world sometimes with these markets. That's why I say you gotta take a step back and keep up with things at times, okay? So look at every single higher high here. Every single higher high is giving you a correction, aka buy the dip. How many dips? Gold, honestly, has been giving you better buy the dips than Bitcoin has, right? Look at all of these. How many can you see? I see 1 at the beginning, 2, 3, 4, 5, 6, 7, 8, 9. Look at the ones up here more recently. These are some bigger, faster moves. Look at this fast move right here, right? What the market does, it trends up, it goes up all week, huge drop. And then what does that turn into? A buy the dip. Look at the biggest sell we've seen on gold here, right here. What does that turn into? A buy the dip. So it's good to be patient this year and let the market kind of come to you and let these types of setups form. All right, guys, so here are some smarter trading strategies and tips that you can use this year to approach gold smarter in 2025. I teach a lot of these in my weekly streams and inside of my inner circle. Well, number one is going to be focus on key levels. Hold numbers like 2100, 2150, 2200, 2700, 2800, 2850 act as strong psychological zones. Look for liquidity grabs near these key psychological levels because they can act like support and resistance. Number two, time your entries with sessions. London, New York session, or even Tokyo sessions provide the best moves. Avoid taking trades during choppy, kind of pre-Asian market, Sydney, end of New York session, unless you're really just focusing on scalping. Three, always use proper risk management. Maybe even try to tone down your lot size this year, because now that we know gold's gonna have more volatility, you wanna be able to survive that volatility because you know now, on average, the movements are gonna be bigger. So it might be better to take a step back with the lot size that you're used to using since these bigger moves are happening. Also, watch news reports like the COT, the unemployment rate, NFP. These impact the US dollar primarily, and gold will typically do the opposite of what impacts the dollar on these news events. For instance, when USD weakens, gold tends to pump with these types of news events. So gold is one of the best markets to trade in 2025 if you know what you're doing. But the goal isn't to trade more, guys. The goal is to trade smarter. And sometimes trading smarter involves not trading, sitting on your hands, aka patience. I'll see you guys on the next video. Drop a comment. Remember to subscribe and like if you guys got value from this video.